All right, good morning. Where you been all day, man? You're late. Gee whiz, it's almost 8:25. So, without further ado, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to the Forex.Today community, a community of 17,500 foreign exchange traders. If you're here to discuss and learn technical and fundamental analysis, address trader psychology, or just to have a chuckle or two. However, with the overriding goal of putting together trade plans for maybe today, but really more for Monday and Tuesday and Wednesday of next week. In fact, many of next week's trades have already begun. You should already be in Mondays and Tuesdays trades. You're like, Wayne, it's only Friday. How could I be in Tuesday's trade? And I'm like, well, you should have done it Thursday. So you're already late. So so let's look forward to the future by planning that today. Cool. So ask questions, get involved, take notes, be courteous to your fellow currency traders. If you want to read my book, the link is in the description below. If you want training videos or live trading groups, the links are in the description below. If you need a broker, I suggest Traders Way. They've earned my loyalty and respect. The link to open a demo account at Traders Way is in the description below the video. It's tradersway.com. If you go there, bottom right-hand corner, you can open up a demo account literally in 30 seconds or less. Then you can be in the back office. You can download MT4, CTrader, MT5, various platforms, and play some trades. You'll find the execution speed is faster than most. The spreads are competitive. The swaps are bigger than most. So there's a lot going on there. But also, they're supporting our community, so give them an opportunity to earn your loyalty and respect like they've earned mine. So here we are already working on next week. The only issue with this trade that we discussed is it's very difficult to buy, but you would never sell it. It's difficult to buy because it's expensive, but you would definitely never sell it. Look at how beautiful that is, huh? Isn't that just wonderful? How does he get those wonderful toys? Speaking about wonderful toys, a couple of things I want to bring up to you. So yesterday I said, hey, you should read the ECB meeting minutes. Did anybody do it? Probably not. Anyways, just if you just like pick out one particular paragraph in the ECB meeting minutes, the U.S. Treasury yield curve has steepened significantly. Well, if you read the FOMC meeting minutes on Wednesday, the FOMC and the ECB were talking about this phenomenon going on. So if two major central banks are talking about it, perhaps it's important. Okay? The U.S. Treasury yield curve, again, this is the ECB talking about the U.S. The U.S. Treasury yield curve is steepened significantly, led by the long end, reflecting an increase in both inflation expectations and real rates. Well, we've been on that trade since April or May of last year. Think about that. What does that mean? We've been on that trade since May of last year. Put this into perspective. You know that Martian rover that just landed on Mars? It was sent after we started getting in those trades. That was sent in July, so it was flying through space towards Mars. July and August and September and October and November and December and January and half of February. Our trade with that knowledge was longer than even that. Okay? So you could have placed your trade, got on a rocket ship, flown to Mars, and you're like, hey, how's my trade? Okay? So anyways, now they're talking about it, which means you really need to be on this clue train. The Euro area overweight index swap curve, by contrast, remained close to the flattest historical level and had steepened only marginally over the past 2 weeks. So they're saying, oh my God, even now, Europe is just compared to the United States. Okay? What does that mean? I discussed this on Monday, so maybe watch Monday's video on what does it mean? What does it mean that the long end of the U.S. yield curve is steepening significantly? Meanwhile, nothing's happening in Europe. The Euro area GDP weighted yield curve has also remained very close to the level observed at the time, blah, 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 blah. So nothing happened since December. However, stable nominal yields, not real yields, nominal yields. Anybody in my macroeconomics course knows the significance about nominal versus real. And so we're like, who cares about nominal? Who cares? Anyways, stable nominal yields in the euro area also masked opposing underlying developments, while medium to long-term inflation expectations had increased at the same pace as the United States. Real yields in the euro area had resisted upward pressure and, in fact, had actually declined to record low levels. So Europe, despite all of this, still doesn't have any inflation. No hope of inflation. The yield curve is still flat. And instead of going up, resisted upward pressure. You want it to go up. It instead actually fell and got worse. This is one paragraph, of a beautifully written report. Things like, in the foreign exchange markets, well, look, if you don't want to read this stuff, that's your problem. Okay? So there it is. I pointed it out yesterday. You had 24 hours to read it. You either did or you didn't. I know you got your new PlayStation 5 and you just have to try it out. And so you did that instead of this. But this is your job, guys. A couple of other things maybe to whet your appetite. I was on the Reserve Bank of India's website today and looking at their gold reserves and their foreign exchange reserves. And guess what? They built up the reserves by $100 billion. this year because of COVID-19. We discussed this in May, I think it was. In May, we had discussed that the RBA was buying up foreign exchange reserves, mostly the dollar, you would expect, by 100 billion. This was in the period when the dollar was strengthening, but also gold was going up because they bought 7,000 tons of gold. So gold went up, dollar went up. And starting this week, and somewhat in the last few weeks, they're dumping those reserves, but not gold. Okay? So anyways, but they are dumping the dollar. Yeah, but we predicted that 6 months ago, 6 weeks ago. But now they're starting to unload, literally, $14 billion. Cool. So that's the Reserve Bank of India and the ECB. Now check this out. This is the Shanghai Futures Exchange. And I was watching this. Now here's how you read this. You ready? Are you guys paying attention? Okay. Previous week, this week, and the change. We don't want the warrants, we want the deliverables. Okay? This is like derivatives, this is the actual physical. All right, so last week, the total copper versus this week. So check it out. China bought 34,000 tons of copper this week versus last week. We went from 78.5 to 113 tons, bruh. 78,500 tons to 113,000 tons. An increase in 34,000 tons for the week. Hey, guess what? Bet you anything, copper prices are at a high. We discussed this yesterday. That's why I wanted to bring this up. We discussed somebody, maybe it was in the swing trading group, but it might have been in our live stream here yesterday, that somebody said, well, copper's up. Like, everything is up, dude. Everything is up. And in fact, copper is at a super high. I think it's like the highest it's been in a couple of years, right? So now we can say, well, is it China buying it? Well, yeah, they bought 34,217 tons of it last week. But watch, if they stop buying, what happens to price? Okay? Aluminium, if you're British, okay, this goes into all kinds of things. Who's cornering the market on zinc and lead and nickel, and all of a sudden it gets less and less interesting to me. But there's some stuff on their oil, because there's some stuff on gold and silver and that kind of stuff. So according to this, I don't know how reliable this information is, but anyways, there's less gold in supply than last week. Okay, but if it's really kg, 153 kg, that's nothing. It's nothing. Cool. So there you go, Shanghai Futures Exchange data. So interesting, right? Okay. So here's a great question. LIBOR says, so should we be cornering the market on Zambian currencies? I don't know anything about their monetary, fiscal, or policies or economic conditions. But you're saying, based on terms of trade, Zambia, an exporter of copper, should be doing really well. Is that correct? And I'd say, well, that is correct, except I don't know their capabilities of producing and distributing and selling copper on the global market. They might have a lot of copper, but they might suck at doing what they do. Now, I don't think they do, but so yeah, will that benefit the currency? Maybe, but I think what they're actually doing is selling, right? So they're going to sell copper for dollars, And then you're going to need the Zambian government, let's say somehow got their hands on all this, which I would assume. They're going to bring the money home and reinvest in the economy. That may or may not be true. I admit I don't know anything about the Zambian economy or the government. Okay, so I really don't know. But for it to impact the Zambian currency, they're going to have to convert the copper, which they sold for dollars, into the local currency, therefore sell the dollar by the Zambian currency. So there's a couple extra steps that need to happen, right, Libor? And I just don't know, so I don't know. But that would be great. So I want to read a book called The Adventure Capitalist. And we can see if we can learn by Jim Rogers about such a question, because that might be epically good trade. Right, Libor? I like the way you're thinking. I'm just saying I don't know because I focus on major currencies. Okay? I'll give you a very interesting example, though. I forget now how many years ago, let's say during the 2008 financial crisis, gold prices dropped by 40% or something, and the South African rand dropped precipitously as well because global demand for their products and services dissipated very quickly because of the global crisis. But you know what happened? South African miners were more profitable. Let me say it again. The product they sold dropped by 30 or 40% very, very quickly. Now, think about how it works. A South African mine sends South Africans to the deep inside of a pit in the ground. And somebody comes out, I have a piece of gold, right? Gold. And then the owner says, give me that. And then they go to Western Europe and they sell it. But they don't sell it for rand, they sell it for dollar. And they pay their workers in rand. You see, a South African gold mine is actually a foreign exchange trading firm. The mechanism of their currency trade is gold. It's based in gold, but they sell the gold for dollars, and then they have to bring some of the dollars back to South Africa to pay their workers and to pay the government or whatever, right? But the thing is, the currency fell more than gold, so gold dropped by 30%, and they were never so profitable. They're like, oh, this is so great because, even, and I'll always remember it, but even a South African will say, oh my God, it's only rand, right? So they're getting paid rand. They're like, I better spend this while I can because it's going to be worthless tomorrow, right? And so the South African gold mines, the owners got paid in dollars and the workers got paid in rand. And the owners benefited and the workers did not. So you see like the extra layer there, Libor, about, okay, I don't know anything about Zambia, but you're saying, okay, Zambia exports copper prices are high. So like we would say Chile was probably benefiting too, right? The Chilean peso is probably what it is. So that's probably all working out great. That is true, but we also have to know how much of the dollars get brought back to the local economy and paid to the local workers to spur economic activity locally, and how much of it just goes to a Swiss bank account. Okay? And that might explain why the Swiss franc is strong, because commodity producing countries are ripping off their local populations and filling banks full of gold and dollars in Switzerland. Right? I don't know. But it sounds like a great story. It should be a movie, right? All right, cool. Remember, everything gets translated into dollars. So one of the things we're studying in the macroeconomics class is like, should Japan produce airplanes or cars, and should the United States produce airplanes and cars? They're both very capable of producing both airplanes and cars, but who should specialize in each, and what would the terms of trades be right? The term of trade be? What kind of negotiation could they agree to so that they both gain more than they possibly could on their production possibility curve? And then I remind everybody, but this is then a foreign exchange trade. You guys make this and we'll make that, and then we'll trade, and then both will have more planes and more cars because we work together. But then I say, well, but remember, ultimately the planes and the cars, as they're traded back and forth, are just money. It all gets translated into a unit of account. Money! Okay? And so that's what we do. So we have to then convert the unit of airplanes into units of dollars. And this is what we trade. So as long as the two countries are trading, Japan and the United States in this example, everything gets converted to dollars and yen, and this is how we trade. This is how we trade it, right? So you got to translate, how does that money come back to the country, not just people in Zambia are sucking gold out of the ground and sending it to Europe and China. Okay? And of course, what happened? What will happen to Zambia if they run out of copper? Okay. All right. So, anyways, here's our pig dog. Off it goes. Nice little trend. It's quite mature, this trend. We've been looking at this since April, right? Since this period, April. And we're still on trend. It's right? I stink. In fact, it just seems like it even sped up a little here once we got through Brexit. Very nice. Right? Okay. It's time to say goodbye. Yeah, look at that. Cool. Anybody going to buy the dip to 21? By the way, was it a 4.5 hour swing trading meeting last night? Dozens and dozens and dozens of people stuck to all the way to the end. That was pretty killer. I always feel supercharged coming out of those meetings. So thank you for those that attended. And I don't blame anybody that had to leave because, look, life is challenging. Right? Life is challenging. I know we got families and things to take care of. But, yeah, thank you for being there as long as you could. But I don't think it was long. I think it was intense. Yeah. Very, very cool. Yeah. Was that right? Yeah, very cool. Swing trades get more pips. That's pretty much it, right, Richard? How do you define a swing trade? 300 pips or more? Yeah. Intense and long. Yeah. Yes, we do record them. Yes, and the recording is already available. Yes. Oh, and did you guys see that I figured out the issue of why macro lecture 1, 2, and 3 did not show up. So they do now show up in the playlist. So if you go into the War Room playlist, it has last night's swing trading meeting, but it also has lecture 1, lecture 2, lecture 3, and lecture 4 of the macroeconomics class. And I think it adds up to about 5 hours total that we've done so far. And we probably have another 12 hours to go. Is my guess. Oh, you saw it? Right. Good. Great. Yeah. Danny's going to binge watch them, huh? Cool. All right, cool. So plan A right now is working out really well. Plan B is still on the charts, guys, because do not be shocked, right, if this comes into play. So it's still a valid setup, but right now plan A is working. Okay? And if you recall, we did plan A and plan B almost 2 weeks ago. I don't think it was there. I think we created this where we said plan A, and in this spot we also said plan B. And the message I gave you back here on the 5th or 6th of February was if it does plan B and we come all the way down and double bottom around this 119.50 to 120 areas, that you don't lose your conviction for your long-term trade plan for euro dollar. Okay? Cool. So, there we go. Okay, so nothing needs to change there. Your question comes down to how are you going to trade it on Monday? And that should be a simple swing trade. Okay, simple swing trade. Okay. Up, blip, blip. And you might get it today, you might get it Sunday. So you have to put that together. Pretty simple. I'd guess we're on our way to 122.50. Right? Or we're on our way down to 119.50. So we'll see. It really comes down to what happens Monday or Tuesday. So therefore, you're either in next week's trade or you're going to get in next week's trade, let it go, and then jam your stop. Okay? Remember, you don't know where it's going to go, but you know what you want to do. Okay, nobody... yesterday we had 5 groups develop trade plans that should last several months. Nobody picked Kiwi, which is interesting. Kiwi is now down a full Monty, which means all the way from the bottom all the way to the top. And now has created a higher high. So I don't know how you feel about that. Okay? If we go back to the beginning of the year and we measure if we're up, down, or sideways, you'll see that it is more up than down. Okay? So we're 2 standard deviations from a mean. So again, buying it now is kind of ridiculous. But what the real question is, are you going to buy it in the future? And that's, if so, what price would you consider buying it? And of course, you can project out here and you can say, well, you know, maybe somewhere in this zone. And I would say, what? Next week's swing trade? And you're like, yeah, okay, great. And that would get us up to what? The weekly target or the monthly target? Yes. Oh, you're welcome, Abel. Absolutely my pleasure. Okay. Can you guys see it? The thing is, you'll have to recognize that the deviation would have to increase, right? So we'd have to go outside the norm to get that, because remember, what this is suggesting so far is that, you know, this would only get to the future projection 2 standard deviations. But what we're saying is it'll need to go there more quickly. right? I think that's what you would say here. Let me kind of zoom in. Or you project further out. Here, I'll show you how to cut the curve here. Let me do it this way. Delete. Do it that way. Make this a darker blue, although we don't really have a darker blue on this. Oop, delete. Project outward like this. Okay, and what the regression is telling us is it'll take 2 weeks. Like literally the last day of the month, we will hit the target at this rate. Okay? And what I'm looking at, in case you're missing it, is sort of like we need to get up there if that's where we're going. Okay? Now, the markets are not paying attention to standard deviations. It's not why people trade. So if they want to drive it up there faster, they're going to. But what this channel is saying is if they trade it up there too fast, what does it force people to do emotionally? If we hit our target quickly, if we bust out of what's been happening and we hit the target, everyone gets what they wanted, what does that sort of create here? Profit taking. Because they're like, oh my God, look at that. I just made a whole bunch of money super quickly. Out. Okay? If they go at it slowly and it just sort of, the water gets hotter and hotter, but very slowly, you don't even notice, and you just keep it running, and you let it run for another month. But if it happens too quickly, it's going to change the behavior of market participants through psychology, what we call behavioral finance, and they'll behave differently because it's like dropping the frog into boiling water. He's like, hops right out. Holy smokes, it's hot in here. But if it happens slowly, you don't behave the same. Okay? You got it? Capiche? Okay? But it's not supposed to go higher, so I would say that would be, okay, that. That would be that. Okay? By the way, do you look at this and think India? I just showed you today that India is selling the dollar. I just showed you. It's factual. It's not even an opinion. They're not selling gold. They're selling the dollar. Why did they buy the dollar? To devalue the rupee. They traded their rupee, Indian rupee, right? They sold the rupee and bought the dollar, put it in their vault. So the rupee is weak. They demanded dollar. They put it in their vault. That increase in demand increased the value. Now they're doing the opposite. They're like, you know what? Take your dollar back. So now they're sellers of dollar, and they're buying something with it. Now they can sell their dollars and buy gold, but more likely they're going to sell the dollar to buy rupee. Okay? Because now they have to fight inflation. So they got what they wanted, and now they have to handle the consequence of that. Okay? So I look at this, and a lot of people would miss stuff like that, right? Like, oh my God, look at that. What's happening? It's, well, central banks are unwinding their purchases from the COVID crisis. And you're like, well, that makes sense because we're getting through it. Like, yeah, I know. It's kind of neat though, right? And I hope you guys appreciate that I share, like, here it is. Here's the facts. I'm on the Reserve Bank of India's website, and I found the facts for you to show you it's not my opinion. These things are actually happening. India, back in April and May, bought $100 billion of foreign currency. $100 billion. Not an opinion like, oh, this might be central banking stuff. That one central bank. And now I'm showing you factually, they're slowly unwinding that position. And that explains what we see here. But it also explains, or let's say, proves that the theories that I've been sharing with you for months and months and months are actually happening the way we would the way we actually assumed. And I'm trying to share with you, it happens that way because it's logical. That's what macroeconomics is. That is what central banking is. That's what monetary policy is. This is why I teach it to you. This is why I studied at Harvard, so that I can learn this stuff to a great degree. And of course, that institution has pushed me to say, show me the facts. Show me the facts. How did you get to that conclusion? Prove it. Show me. Give me the facts. Oh, well, if you look at the Reserve Bank of India or the Reserve Bank of Israel, look what Israel's doing, and here's these numbers. Okay? So this is what the Wayne do, and I hope you like it. Okay? So yes, I'm opinionated, but at least I can back that stuff up. And I'm trying to show you that you should be doing this stuff too. Okay? Are you taking it that far? Probably not. Would you like to? And I'm trying to show you, you can if you want. Okay? So, in the last couple of weeks, I've showed you the Reserve Bank of Israel, the Reserve Bank of India, the ECB, the RBA, the Fed. Then we went into the Fonterra dairy auctions. I showed you the Shanghai Commodities Exchange. We've talked about OPEC, EIA, and IEA websites. Okay? There's a lot that I'm sharing with you. You can do any of this whenever you want. Okay? Whenever you want. By the way, I'm getting YouTube area, right? I'm getting YouTube errors again. I don't know why. Let me pull up my Google speed test. Okay, much better than before. So I got it from 50 to 600. It's pretty consistent. So I don't know why YouTube is having a problem. Okay. So I got 32 gigs of regular RAM, but I also have the, what's that Epic IBM RAM? I got that. It's really cool. Optane. I have Optane. So I have this, plus I think I have 16 gigs of Optane. So I got 48 gigs, and I don't even hear the processor, so I don't know why YouTube is having a problem. Come on, YouTube. CPU, though, is pretty hot. Who's using my CPU? OBS. Oh, well, that makes sense. My son built himself an i9 rig with his own money. So anyways, interesting. I should be doing better, but YouTube shouldn't be having problems. By the way, I like that Optane memory. If you guys are into that kind of stuff. Okay. William wants to know if we're going to get a move today. The obvious move would have been this one, or pound. But you're like, are we going to get a move today? I'm like, that's a pretty good day. Let's change it, look at it from a different point of view, okay? Day trading bullish. You see that? Day trading bullish bias. And you're like, is there going to be any moves today? You mean like this one? That's a very basic, simple day trade. Well, okay. Well, that already happened. Okay. We could look at Euro. Is there going to be a trade today? I don't want to mess with Euro. I like this setup. We can switch over to Euro later. And I don't want to mess with this one. We spent, what, two or three of the groups focused on USD CAD last night. So we got the brain power of about, 20 currency traders yesterday. And all 20 of the currency traders said this would fall. And, well, it did. So thank you, guys. We can change this and look at it from swing trading bearish. Okay. And how do you trade? How do you swing trade? This, my friend, is a swing trade. Okay, that's a weekly swing trade. Okay, similar to this. Okay, so last week, let's say this is the sell zone, this was the target. Okay, this is the sell zone, and we're just trying to find, we're stretching out to hit our target on a Friday. Our target is 125.93. And it, okay, so we're 12 pips away from the weekly target. Cool. So your question is, the thought is you either traded it in here for next week, or you're going to wait and do something like this. So now you have to drop in here and go day trading bearish bias. Every single trader said down last night. Okay. And today's trade plan, if you're a day trader, is to sell in that area. And yeah, now we get back to this target and we know it's probably done for today, right? This is our kill zone, the killing fields here, okay? But last night's analysis was this. So thank you to those 20 traders that collaborated, 2 different groups, right? And William actually got the trades. There you go, William. Isn't it great to have that kind of group work? Okay. Okay. So we met, we met in this green. I think we were in that green candle when it was planned out. We were right here during the meeting. One of those 2 candles. I don't know which one. Okay, I guess we ended on the green candle, right? So I think we were in this red candle and we said up and down. Very cool. Good job. Oh, Gary's on the trade too. William feels uncomfortable holding it over the weekend. Well, I don't care about holding over the weekend. What I care about now is this. That's a different thing than worried about a gap risk. A gap risk was something that we certainly faced, I would say, 10 to 20 years ago. And most of the time it would gap 20 pips, but sometimes it would gap 200 pips. It almost never happens like that right now. It's too liquid, too deep, too many market participants. So I don't sweat it at all. Okay? Okay, William? So now, if you're going into your trade and you only have, you're plus 18 or something, well, your stop doesn't move, so leave your stop at negative 33. Okay? And if it pops up and things change, well, you'll take a negative 33 pip loss, which is nothing. It's meaningless. And then you'll trade your plan B if you get it on Sunday, Monday, right? But if it works your way, then you'll wake up on Sunday and you'll be plus 55 by Monday morning. And then you'll move your stop to negative 3 and you'll be golden. Okay? That's typically how it works. Okay? I would say typically, if I had to kind of draw a profile, I'd say in the first 24 hours, I'll have an opportunity to move my stop, like not 24 minutes, 24 hours. I'll get the opportunity to move my stop to negative 3. Or I would have busted out and I'm negative 33, but I don't even notice these ones because I don't even stare at them. So I just move on to other trades and then I'm like, hey, what happened to that USD CAD trade? Oh, it looks like it busted out on Monday. Oh, that's too bad. Well, where's my plan B? Oh, a little higher at that resistance. Okay, great. Okay, so it's like I don't even really see these. That's why I don't sweat the losses. So I usually just jam it at negative 3, and then I'm like, okay, when do I move it? And that's the bigger question. Entering the trades are not big questions for me. Okay, like for example, you're a bear. There's the high. Here's the lower high. It's got to fall here. It cannot go up here. So it shouldn't be that difficult. Okay? If you're a bear, it can't go higher than this. So if it's a trend, it won't go there. If it goes this high, it's not a trend. So you know as a bear, right? Like as a bear, it has to stay lower. So then you have to fold this into there. Okay, then what are the next trades? So if that rolls over, so double top, great, lower low, lower high, lower low, lower high, lower low. So now we're at a different question. If it is a downtrend, it has to break this. But what if it's not a downtrend? So that's kind of the thing, like this is when you should move your stop. To move your stop from here to here. And now you have no risk. Or if you really don't know, you really don't have conviction right now, and I can see it, you're like, I think this will fall, but it doesn't have to fall in the next 2 weeks. So you could just take your profit. But don't be worried about gap risk. I mean, you're going to trade the same. You're always going to have a stop. So your stop is either wherever you put it originally, let's say negative 33 or negative 50, whatever. And then you go through the weekend, well, you're still facing the same risk, right? And if you go into the weekend plus 18, now you got to be basically 70 pips to get knocked out. That's not a gap risk. We haven't seen that in years and years and years. Now, it could happen, but it's not likely to destroy you, especially since your lot sizes are so small relative to your account size. So like it shouldn't be something that you spend a lot of time worrying about. If you're leveraged properly, which means low, and you're holding profitable trades into the weekend, then you would need like a whole average daily range to go negative against you, which is probably a pretty decent indicator that market conditions have changed, and you don't want to be in that stupid trade anymore anyways, because it's an old trade. You took one too many. So you see that, William? Like I don't think of it the way I used to 15 years ago when you could wake up and you're negative 200 pips because you got gapped. negative 200 pips. You're like, holy crap. Okay? Okay? So with proper risk management, proper leverage, proper planning, it's not really, I don't lose any sleep. Right? Now, holding a losing trade into the weekend, I've never recommended that. That sounds stupid, right? So, yeah. Okay? And by the way, this is why we meet on Thursdays to discuss trades for Monday and Tuesday. Because by the time Monday and Tuesday shows up and someone says, what's up, fellas? What are we doing today? We made our trade a long time ago. And those people that show up simply provide us liquidity when we want to get out. And we say, hey, thank you, showing up. What are we doing today? Oh, here, yeah, buy some CAD from me. I'm selling, here, buy some CAD from me. Here's some CAD, buy it off of me. Oh, okay, good. I guess we're buying it today. Yeah, and you sell it at Target and you're out, right? So those people that show up with no plans, we actually need them because they are liquidity events for us. When we need to bail on a trade, like you spent 3 days in a row, you were buying CAD. And then people show up on Tuesday, they're like, what's up? They're like, you should buy some CAD. I've been buying it for 2 or 3 days. You should buy some CAD from me. And you liquidate. That's why they're liquidity events. You literally liquidate on top of them. Like, I liquidate all over your shoes. And they're like, oh, thank you. That's such a great trading tip. Like Citadel. You hear that? Citadel was buying the trades from Robinhood like a dark pool. Oh my God. See, if you read Flyboys, I think it's called, about high frequency trading, Citadel was one of those firms. Citadel was one of the firms that made something like 20,000 trades in a row without losing money. Now, how do you do that? You cheat. Flash Boys, thank you, Flash Boys. The only way you do that is by cheating. Like, you can't win thousands of times in a row. Okay? So, what are they doing? It's very similar in the sense that they get to see all the order flow coming out of, right? All the retail order flow coming out of Robinhood. And now they have this information. And then, of course, now there's a lot of stuff you can do if you're buying the order flow. It's not going into an exchange. You see that? Like, it's not going into the New York Stock Exchange. It's going into Citadel. So now they know where all the trades are and where all the orders are. Do you think they could pick up a hundredth of a penny here and there with knowing where all the orders are? Oh, my God. Right? How scary is that? But, like, I laugh when people are like, oh, I'm trading with Robinhood, it's free. You're like, yeah, it's like a non-profit. They're doing it out of altruism. They're like, we should change the world by offering free trades. No, you're getting... Oh my God, anyways. I can't think of an analogy that works without being rude or inappropriate. But you're paying a fee. You're paying a fee. Yeah. So anyways, thank you, Citadel. Yeah. So like one of the ways that Citadel used to do it, and that not just them though, this is what was happening at the time. You had New York City like this, and there's a bank here, a bank here, a bank here, and they're all placing orders, and all the orders had to go through copper telephone lines, right? And the exchange, let's say the first exchange, which I think was BATS, was here. So I had to go to BATS. So this bank had wires that went like this, and this bank is across the street. But because the telephone system was created 150 years ago, right, it would go like this. And they could tell when orders came in by the latency. Was it bank, let's do it this way. I have to make this a little smaller. Was it bank A that placed the order? Hang on, let me change this. Okay. Was it bank A? Was it bank B? Or was it bank C? And of course, what they're doing is, these are banks, these are large institutions. So they're like, buy 10,000 shares of Apple, right? Something like that. And they would see it as it's coming, because it had to go here to here, so it's very slow. Okay? And finally, it gets out of Manhattan, crosses the river, it gets to BATS, and then Citadel says, buy one share, or sell one share of Apple, or whatever, right? Flash, because these were large orders, blocks of orders, but the way that it was done based on fees, these guys knew how it all worked and everything. So they'd flash like fill one order here of the 10,000, but they're like, oh my God, this is Credit Suisse. And we know if Credit Suisse is buying Apple, they're not buying one share, they're buying thousands of shares. So they would fill the one order, okay? And then at the same time, okay, they would go over to here to the next exchange, because what would happen is the first exchange says, okay, we only had one seller of one share of Apple at our exchange. So now there's 9,999 shares, which would suddenly pop up here. Ba-da! Because it was Citadel. Okay, but the thing is, what did Citadel do, right? So now you got 9,999 shares here, but they saw it and bought it from another exchange over here, right? So they're like, aha, aha, aha. Credit Suisse is buying. We fill on BATS. We buy here. We send it here. We sell it to them, all in 100th of the second. The only reason Citadel bought Apple shares here was because they knew 9,999 trades were coming in through here. So they bought it, front running them, and then sold it to them to make 1 penny per share. But they knew it was guaranteed. So they made 9,999 pennies free, guaranteed, because they bought it and sold it in literally 100th or even 1,000th or even 10,000th of a second. They're like, in literally the amount, right? In the time it takes you to blink your eyes, they could make $75,000. Blink, boom. And they only did it because they knew it was guaranteed. Because they already saw the order, bought it, and flashed it, done. So they have to flash this order to figure out the latency, fill the order as much as that one exchange could, and then the other trades that got unfilled go to the next exchange where they're already sitting there waiting to sell because they already knew there was a buyer. So they're like, oh, you want to buy something? I have it right here. So now Citadel is paying money to Robinhood. Give us all your trades. Here's $10 million. Send us all your trades. Well, is it possible they're doing something like they used to? Flashing the orders? They see now all the orders. Is there a way that they can probably make money with this information? Enough money where they're willing to pay Robinhood cash just to see the order flow? Is it possible they got a system going on where they can benefit from this? Or do you think they're also doing it for altruism? Citadel wants to help out the poor retail investor. Did you see the interview or the testimony? I used to be a retail trader myself. We all started out as retail traders. You're like, dude, you've made personally billions of dollars ripping people off. Like, oh my God. Right? Isn't that amazing? They're like, oh, I wouldn't rip off a retail trader and make money on their back. I used to be a retail trader too. I feel and empathize for the retail trader. Uh-huh. Yeah. Yeah. Oh, for sure. Yeah, how nice. Well, thank you, Mr. Citadel. Thank you so much. Okay? So anyways, another book you might want to read. It's pretty amazing the length to which people went to improve their latency. Like, it's beyond belief. Right? Drilling holes through mountains. There's one story where they're like, you can't drill through this limestone. You can't drill through it. You'll only get an inch a day because it'll just melt your drills. Well, then we're going to buy as many drills as we can buy. Keep cutting through that mountain. Whatever you do, don't stop. Pretty amazing stuff. Grumpy Cat, is it still happening? I don't think the same trick is happening because everybody knows the trick now. And if you didn't know, I just schooled you. Okay? But here's the thing. Are they doing it because they're nice guys? Oh, we like Robinhood. Poor guys, they don't charge any money. Well, let's help out Robinhood and give them some money. Hey, Robinhood, give us your order flow. We'll give you some money. We like you. You're nice people. We like your mission. It's so nice for you to provide a free service and for no money. Well, the whole idea is stupid right off the bat. How could you possibly offer a service like that to millions of people and not charge money? It's pathetic to even think that's true. But then now you're finding out, how did they pay for all their expenses and pay all their salaries and pay all the money that's required to be one of these brokers? And they're like, oh my God, they were selling my orders to a hedge fund? What did you think they were doing? Like, oh my God, what do you think they were doing? Of course they are. I figured they were trading against everybody anyways. That's what I said 2 years ago. I'm like, oh my God. They're sending out alerts like, oh, you should buy this company. It's our hot pick of the day. And 10,000 people buy it. Well, you know they bought it yesterday. Front running everybody. And then if that's illegal, then they're going to allow other people to do it. So how about this? I don't know if this is happening, but how about this? Robinhood calls up their buddies, somehow signaling, wink, wink, because I know they don't want to do it over the phone. They probably don't do it over texting, but they got away. Signal pigeons, right? Pigeons land at Citadel's office, and they take the little note off the pigeon's foot, and it says, tomorrow, XYZ Corporation stock is going to be our trading pick of the day. The email goes to our client base at 8:01 a.m. Eastern Time. So at 8:02, oh, Citadel's a buyer. And everyone gets the email and then, oh my God, it just popped. I guess everybody else is buying it too. So now I got to buy it. And everyone's just buying it simply because they were told to. And meanwhile, Citadel paid $10 million and they made $18 million in a morning. They're like, this is nice. Could happen. Blue Horseshoe loves Caldecott Steel. It's totally illegal though. So they would have to find a way. I don't know if that's happening, but that's what I said. If you remember, we talked about it a couple of years ago. I'm like, it's so easy to betray somebody that way. So to get a whole bunch of suckers that will jump on a stock trade because their broker gave them a tip. Oh my God. You think it could be possible that someone is a little bit unscrupulous about that? Oy vey. So, if you don't know, now you know, you know? Yeah. Holy smokes. Okay. Conrad says the funniest thing about that book is when customers discovered they were front running, they didn't care. Well, they probably also didn't understand it. But I'll never forget the FXCM email I got to all clients. Dear client, we have decided to now slip for you as well as slip against your trades. And I thought, that is really nice. Thank you. Because before, apparently, they would only slip in their favor where they always made money. They're like, oh, we didn't mean to slip a half a pip. You probably don't even see half of a pip. Well, what if you slipped every client on every trade by a half a pip and you got 400,000 traders? I don't know how many trades FXCM is, and I don't know if they did this, but just think about it. Let's say 400,000 traders made one trade a day, so now there's 400,000, let's say, mini lots being traded, and every single one of them was a half a pip slip. That's 200,000 pips a day. And nobody noticed. So I don't know if Drew Nib did something like that. I've only met him once. I don't know anything about it. I don't know anything about that, but I got an email that they said, because of this thing the NFA found, we will now slip for you, not just against you. And I'm like, wow, what a nice email. But Conrad, did anybody care? I don't know. Okay? But I'm just saying, it's interesting that these things can and do happen. Right? These things can and do happen. But a lot less than when Forex began a million years ago, when it was kids running brokerage firms out of their college dorm. All right, so there's yesterday's trade plan for Bitcoin. That looks pretty good to me. It looks pretty good. I can drop down and, right? So yesterday we said down, and it's pretty close. It's pretty close. It's pretty close. So let's see. You buy it at the London Open. Yeah, that's a pretty good strategy. Double bottom, higher, high, higher, low. You see it? Okay, it's not what you do, it's when you do it. Now, it's funny to think that people are just walking in trying to figure out what they want to do today. So, okay. And it's already happened. I guess that's kind of the message. Like, someone bought at the London Open. Someone's front running New York on the role reversal, kicking it off to 21. It's done. Like, they're done for the whole day. What's going to happen now? Well, if you bought it here, maybe you've already moved your stop and you're done. The best thing is, at the end of the day, you find out you lost 3 pips or you're up 8% because on a crazy Bitcoin day, right? Because you're like, yeah, we're on our way to 60. And that's kind of how I would play that, I think, because with Bitcoin, I mean, I don't know what the underlying is here. So why not? Why not all of a sudden it goes to 55 today and all you did was buy the New York Open? Okay. What'd you do today? I bought the New York Open. Then what? That's pretty much it. Yep. Yep. Right? Yep, that's pretty much it. Yeah. You didn't do anything else? No, not really. I bought it. When are you going to get out? 200,000. All right. Cool. So there's your biddy. Gold was interesting. I think yesterday, wasn't that our focus yesterday in the live stream? Is it going to double bottom or not double bottom? Right? That was it, wasn't it? Didn't we spend a lot of time talking about this yesterday? Yeah, Princely, right? What'd you do all day? Well, I bought Bitcoin and then I smoked a cigar and had a nice coffee. Monte Cristo cigar with a Monte Cristo coffee. And then I went to lunch. That was cool. It was a really nice new restaurant in town. What else did you do? I shopped on Amazon. All right. Okay. That's what happens, by the way, when you stop scalping and day trading. I'm not saying it's the right answer, but it is one answer. When you're day trading or swing trading, most of the time, literally 99% of the time, you're not doing anything. What did you do? Well, I sold it on Sunday. Well, it's Wednesday. What are you doing now? Well, I'm really concentrating today, struggling with the idea of the decision. Puff, puff, puff. Should I take profit or not? It's up 300, it might go up 500, but I might come back and I might give up a couple hundred. So I'm thinking, well, what are the laws of average? Should I take the profit? Should I not? Where's the pivot? I don't know. What about tomorrow? I don't know. So I'm going to spend all day smoking this cigar and thinking about, should I take profit on my trade? Like, that's what swing trading is, guys. It's not 15 trades a day. Out, in, out. Oh, half of them won, half of them lost. How many pips are left over? 9. Excellent day. Right? So, yesterday we talked about it. Are you planning on this going up, or are you planning on this going down? A theta, when I say R predicts S, first of all, that's an inside trading week. And what are those, and based on what, how did I get to that decision? Only from observation. Okay? Okay? I spent years and years observing what all these tools were. So like, I remember when I first started trading, I had to pay $200 a month for charts. And one of the things they would do is say, well, we have 300 indicators. And another charting package would say, well, we have 500 indicators. And then another one were like, we have 1,000 indicators. And like, so I would open up, what was it called? IntelliCharts, I think? Or no, that's the FXEM one. So I had IntelliCharts. And I had a couple of other ones. There was not meta charts. There was something like that. But anyway, so I remember going to like, I'd look at like, what is accelerated oscillator? What's accumulation distribution? What is alligator? Does anybody use the alligator? Like, I'm like, so what does this do? Jaws period, teeth period, lips period. Literally nonsense designed to sell to somebody. It would have to be so stupid to call it an alligator. It includes jaws, teeth, and lips. But somebody would buy that. You're like, hey, this alligator thing will make you $1 million. Look at it. It looks like standard MACD settings. But anyways, so you throw that down there and you're like, oh, look at this. So it just looks like moving averages to me, right? But whatever. So I would do this and say, well, are they moving averages? What's going on with the math here? Do I like it? Do I not like it? Does it accurately show me the trend in the future, or is it only the past? How could I use this? Can I change it? What if I change this one? What if I change that one? Does it work on a daily? Does it work the same on an hourly? If it's above, should I be a buyer? If it's below, should I be a seller? And I would just observe and I would tinker. And literally, I'd spend weeks on this alligator. And then I'm like, it just behaves like a moving average. So why wouldn't I just use a moving average? So then I'd delete it. Okay. So I spent years and years and years in deep thought using basic tools before I even wrote my book. So in my book, I say on an inside week, an R1 would project an S1, an S1 would project an R1. How did I get that? Well, there were no books, right? There was no training on, the only training I did was Bollinger Bands and MACD. Okay, I found a course from the 1980s by Gerald Appel. It was a workbook and an audio tape. And he taught me MACD, the moving average convergence divergence indicator. So I'm pretty good at that because the man that invented it taught me the math. Nice. Now I can teach you. Nice. It's only math. Ultimately, you can do it in your mind. Okay? So how did I get to an R1, S1? I spent thousands of hours observing pivot points. Okay? I'd say there's very few people that would know pivot points more than me. Not that I am the best. There's a few people that would probably hold their own for sure, but very few have put in the work. And the other people that could hold their own, it's because they have put in the work too. And they might have different opinions. And I don't know, I'm self-taught, but they're probably self-taught too. And now we teach people, and then what they do is they take that information and write their own book. And they probably are piss poor students, so they write the information wrong. So I don't know. Nobody taught me how to trade pivot points. Right? So how do I get to that? That's what happens in my experience. That's what I typically see. So, getting back to this, our question was, I have to go back out to the daily. Are you going to trade this as a bottom? Okay. You'll say, well, Wayne, there's a trend line going on here, and there's a trend here, so now you could use a GAN fan. All right, use a GAN fan, I guess. So indicators. Trend. Where would you have this? No. What could be? Oh, a Gator oscillator. Oh, it's Bill Williams. He's got all kinds of Gator crap, huh? Great. What do you go to Florida State or something? So where do you get these fans? Like channels, indicators, trend line by angle. Channels, no, GAN. I guess a fan. Let's do a fan. I'm a big fan. Oh, it's gone the other way. How do you get it to work? What is this? What is it doing? Oh, I guess you have to do it this way. Okay. What is this? That's so funny. Okay. Okay, I guess you connect this with that. That's not helpful at all. Here, let's try to make it helpful. I'll do my best. I mean, dude, what is this? What is this doing? I don't know. This is meaningless to me. But anyways, even if you think it's going to go down, it should go up before it goes down, or otherwise it would have already broke. Yeah, where's this better? Not the GAN. There's probably something in there. Let's do the GAN grid. Yeah, I guess I don't know how to do the grid. Insert. Let's try to get it going. It's so fun. Okay, I saw it drop this one. So what is the grid? Oh, nice. Oh, that is so helpful. Oh my God. What's it doing? So let's get rid of this one. Let's get rid of the fan because I'm not a big fan of the fan. All right, so I guess what it's trying to do, this is a different one, delete that. I guess you would what? Use this like a trend line and from there it does something. Okay, that probably makes sense. All right, so he's trying to do this. Okay, we'll call this, there's our grid. All right, that looks hot. All right, so now we can make information. We can make an informed decision. Thank you, Mr. Gann. All right, so Gann is probably thinking like this. So the question is, are you going to do something like that? Okay. What do you think? Are you going to do it? John Murphy. Richard says you got all the books from John Murphy. Who's John Murphy? I think I know a John Murphy in London. Okay, so that's what it comes down to. I don't even care about these tools. Look, are you going to buy it or are you going to sell it? Okay. All these tools, I guess, are crutches to help you make a decision. The most important thing is you make a decision. Okay. I don't care how you get to it, but you need to get to it. So there's our line we drew yesterday. Are you going to buy it now? You're like, well, I'm waiting for a giant bullish engulfing candle off of our support price. Okay, is that it? Are you going to buy it? Are you going to wait for the alligator to catch up? Right? Like, are you going to do it or not? Okay. If you buy it today, let's play it this way. If you buy it today, if I were the buyer, if I bought it today, I would take this up to 1855. Okay? And yes, we're at 1760. So no, 1780. Yeah, I know, right? Yeah, right? Yeah. In fact, if I'm going to take it all the way up to 1850, I'm going to take it to 2000. So who cares? So I'm going to buy it here. I'm going to make $250 an ounce. Why? Well, because it's no extra work. The work is here. The work is me discussing this with you yesterday for a half an hour. Are you going to do something in here? And if so, what is it going to look like? So a bear might have taken this shot here, and here's the thing, they just lost money. So now who's going to fight the bulls? If the bears just got out, who's fighting the bulls? Maybe nobody. Okay? And you say, well, how do I know it's going up? Well, first of all, you don't. So you're going to have a theory that the Bank of India is selling US dollars, but not gold. So they're holding gold, selling dollars. What would that do? Also, you have this as a double bottom, which is a reversal pattern. On top of that, this is your weekly swing buy zone. So if you're a bull at a double bottom in a buying zone, do you buy? I don't know if you buy. I don't know. Do you? What is it you do? Are you ready? Is this a plan? What is the best trading hour of the day? Has anyone, I've done it multiple times. I'm sure there's multiple recordings on Forex.Today. It's very, very, very similar to how to trade oil. And that one I give you a very specific hour. A very specific hour. And by the way, it's not New York Open. That's too fuzzy. Okay? It's not the US stock market. It's not 8 a.m. There's a specific hour. That's right, Michael. Michael's exactly right. 7 a.m. New York time. Which means, okay? And then this is for sure. The next part is by 10 a.m. you'll be done. Or pre-London, but I can't trade pre-London, right? So I don't know anything about pre-London. But for this, for gold, yeah, for gold. Specifically gold. Okay? Done, meaning if you take profit, in my experience, of course not always, but my experience, you'll get 75% of the average daily range. You're going to get most of what gold is going to do today in the first 3 hours of trading. Stuff like this. So you would have to, you're like, but Wayne, you would have to know gold would go up. Well, let's talk about it. Once again, you're at a technical double bottom. We talked about it yesterday. So is it possible you had an opinion on this? Yeah, I told you to have an opinion. Also, it's next week's buy zone. So do you think bulls would buy it and front run next week? Well, yeah, we talked about that yesterday. Third, if you do fundamental analysis of the market, central banks are selling dollar and holding on to gold. So if the value of the dollar is going down, okay? And then lastly, maybe not gold specifically, but in the commodity world, I just showed you that China increased its holding of copper by 20% in a week. So is it possible that all commodities in general have a bid? And that under these conditions, people might buy gold because they haven't been buying gold all year? Yeah. Yeah, all of that. All of it. Okay? All of it. Okay? But to get you there, I have to change the way you think. Okay? Okay? I have to change the way you think. None of this, I think, was predicted very well by your alligator. Remember, the biggest thing holding you back, most likely for 90% of people listening, is that they look to their indicator to make a decision, to show them. And then when they can't find it, they change their indicator. And then they change their indicator. And what if you use these two indicators together? Well, what if you just do this? And what if you just do that? Well, Wayne preaches pivot points a lot. So what if I just use pivot points? Now am I going to be profitable? No, you are not. Okay. You must make a decision. And the tools will confirm or deny or at least be helpful in your decision-making process. They are tools. Okay? But if you can't decide that you're a bull on gold for fundamental or even central banking monetary policy reasons, and you don't know if you want to buy a double bottom, and you don't know if you want to buy next week's swing trade, and you don't know if you want to buy today's day trade, and you don't know that you want to be at the market open for the trade in the direction that you want, then that is the problem. And that this alligator crocodile is not going to make your life any better. Okay? Okay? So what I said, by 10 a.m., we'll have the majority of the average daily range done. So let's say between now and 10 a.m., we hit this area here. And you bought it down here at 7 a.m. and 8 o'clock, 9 o'clock. So let's say it happens even before that. I guess it's almost 10 a.m. now. Wow, I went long today. Yeah, so you're actually starting to bail out. You want to get as close to 1,800 as possible, and then you're done. So in at 7, out no later than 10, and you just day traded the sucker. Okay? Another way of looking at it is sold it here, out. Okay? Actually, this wouldn't have been a sell. So anyways, whatever. This is an out of position. This is an out of position sell because the sell would have been higher. So anyways, a little trickier. Okay? I would say the most important thing here is on this time frame, it's a double bottom. So anyone that's going to buy it is going to buy it there. We don't know. Here's what we don't know. Are we going to go to 2,000 or are we dropping to 1,500? That's the part I don't know. That's the part you're going to have to make decisions on. You can be a bull, right? You can be a bear. I can be a bull, and most likely we'll both make money. It's when you're looking backwards and trying to ask your tools to do the job for you. Okay? Okay, your Tesla's not going to trade for you. It might be able to drive you to Starbucks, but it's not going to be able to trade for you. So you're going to be the one driving this one. So peace on earth, may the pips be with you, may your profits be above average. Have an epically awesome weekend. Make sure you study your charts. Make sure you identify your strengths and weaknesses. Make sure you're at your charts and the market's open, right? 6 p.m. Eastern time, for example. I know where I'm going to be. I'm usually here at 5 and 6, okay? And by 7 p.m. on Sundays, I'm usually done my entire week for swing trading, okay? Right? Swing trading is done. By Monday morning, I'm done my weekly swing trading. Most of the time. Not always, but mostly. And very often, by the time Friday shows up, you're already in. So like if you bought this because you're front running next week's, okay, then you just did a swing trade. And of course, my favorite trade is this one. Plan B. Plan A is aight. Okay, Plan A is aight. Plan B is awesome. All right, good. Have the best one ever. Thanks for being on my team, everybody. Remember, if you need a broker, you need one you trust, I trust, tradersway.com. Join the family, huh? Cheers.